Welcome back to another TradeOut's technical analysis tutorial. This is the long-awaited introduction to range trading. So we're going to start off with identifying ranges because you have to obviously be able to identify a range early on. That way you can get your levels set up in order to trade it properly. And then later on in the module, so videos 2 and beyond that, we're going to be going over some of the really awesome tools that are available to help you be able to trade these ranges a bit more effectively. So that'll be coming later on in this module. But again, we're going to start with the very basics here of identifying ranges. Let's get to the video. Okay, so identifying ranges. How do we identify ranges? And the very key thing that I want to pay attention to here is it's identifying ranges, but doing it at an early stage so that you have as many trading opportunities as possible. Right now, this range that you're looking at is a pretty mature range. It can obviously continue for an extended amount of time, but the earlier that you're able to spot these ranges when they first start to form, then you're typically going to have more trading opportunities within that, right? So how do ranges form? So a lot of, majority of the time, it's due to an impulsive move, okay? So price is moving very strongly in one direction or the other, whether bearish or bullish, and then it takes a break. So essentially starts to consolidate, go sideways, reaccumulate, it could be reaccumulation, it could be distribution, it could be, a number of things. But the fact is it usually comes from a strong trend in either direction, and then price will take a breather and form these sideways consolidations. And again, they could last for, on lower time frames. If you're looking at, a 5-minute chart, you could have a range that lasts for half a day to a day. And you could trade, trade that. Or if for this instance, this is actually a daily chart, which we're going to actually get into this on TradingView. But, these things could last for months and months and months. And you could just continue to trade these same levels over and over again until price decides to leave the range. So this chart should look familiar. This is Amazon. Pretty sure I actually used this in one of my previous videos as well, but this is a really good example of a range. And let me just close this panel here. But just like I said, how do ranges form? Well, if you go back and look at the trend, very bullish trend, this thing pretty much only goes up. But, very strong uptrend, as you can see, very strong uptrend, and then a period of consolidation or a range gets formed here. Well, I guess I'm only really interested in the date. So, it would say that. So this range was about 749 days. That's over 2 years that price was within this range. It literally was a multi-year range before breaking out to the upside. See this impulsive move? So very strong trend to the upside, marks a high, and then retraces, and here you go. So you start to form this range. Which, I would say it probably starts here. But until here, another 490-day range. So well over a year. So you have a multi-year range here. Price gets very impulsive, big move to the upside. If you remember this is coronavirus drop right here. And then V-shaped recovered and massively new all-time highs. And again, we've been forming a range for 490 days. So, and there's a lot, so here's another range that formed. This is kind of getting a bit crazy. But again, you kind of have this really strong uptrend, and then price starts to go sideways like this. So that's another range that can form, but we're not going to really talk about that one. But just again, sideways consolidation. So the main one that I'm going to focus on is this, because that was the example that I had used in the previous slide. And it's really simple looking at this. You're going to kind of, like, again, you have your impulsive move to the upside, and then this is where it puts in a high. And then, so again, big impulsive move up, kind of has a larger wick to the upside, nice retracement, right? So high, retrace, high, retrace. And then you start to get this sideways. So as soon as you see this type of price action here, you really can start to pull a range on this from this local time frame, right? So this becomes a range. But overall, obviously we're looking at the chart where we're at today, and we have this beautiful massive range. So this is what I'm going to essentially focus on. But again, this is how you're identifying this range very early, right? So you have your impulsive move up, you have this bit of consolidation, another impulsive move to the upside, which marks your top, big reversal to where? Bottom of this range. So this especially is confirmation, in my opinion, that not only are these levels important, but this marks the beginning of the range for me. So again, impulsive move, consolidation, you could already be trading this range here, breaks to the upside, so you would be long, marks your top, pulls back to the bottom of this range, so you know that this, like, you have these points, the likelihood of this, of this becoming a range is relatively high. Were you wrong on this? Simply if it starts losing this low, right? So we did take this low here, that's okay. But if you start to see price kind of work its way back down, then you know that you're not going to be forming a range, right? That you're probably looking for a deeper pullback. So if you were to be trading Amazon for the first time right now, and you were looking to trade this range, the first thing that you have to do is mark your range off, okay? So again, for those of you who have been following me for a while, this is going to be a little bit different than you're used to seeing, because all of that stuff's coming later in the module. So I don't want to spoil all of that. But yes, there's obviously going to be different levels here that I will ultimately be marking off. But I wanted to start at like the elementary basic beginning part of range trading. Okay, it's identifying these levels before you get fancier and start pulling, if you're using your fixed range tool and all that stuff, and finding your other levels. I want to start at the very, very beginning. So it's gonna be a little bit different. So I mean, you could use lines if you want to. This actually channels really well. So if you did a horizontal channel, this actually channels really nicely. But I guess I could just draw it. So basically what I would do is that you have your really nice high here. So that's essentially where I would start. And I just go straight across. And you can see that just this high alone, right, is incredibly well respected. Like, I guess let me keep it a little bit easier. I'm gonna have to put my magnet tool back on. That way it looks a little bit nicer too. So there you go. So essentially this is what I would mark as the top of the range. And early on, obviously we have these points of, you have these basically, once you get your high get put in here and you're pulling back and you see a reaction off the low, then you know that this is a point of interest for you, right? So this is the high of that range. And what do you know? As price moves along, still consolidating within this range, where's your next high? Literally it tops here. And you get a big rejection. So I'm just curious price-wise, percentage-wise. So that's a 12% move, which is a lot for traditional markets. Like 12% that's pretty decent pullback. But again, the high of your range is very well respected, and you get a rejection to the downside. So now let's mark the low of the range, because this one's pretty easy. So you could mark it here if you wanted to. That's fine. But you also have a really good pivot point here as well, and which was the very early onset of this range beginning to form, right? So again, we have your impulse move, consolidation, nice range, impulse, and then price comes back to the bottom of this range. So this is technically where your range started. This is your range high, but I would argue that your range low is actually here, right? So it gets put in around here. And of course, looking ahead, you can see that this area was incredibly well respected. So I would class this just to explain this a little bit better. You know, you saw that the previous range was 749 days long. So this was obviously a really mature range, multi-year range. And this is over a year long as well. But it could continue for another year. Like, you don't know, right? So as far as I'm concerned, when it comes to this particular range, we have like I explained, how to mark your range low and your range high. There's always going to be a midpoint to the range. Okay, so like you're going to have your range low, your range high, and then again, there's going to be other levels within this that you could use. But to keep it really simple, you want to find your midpoint of the range, and your midpoint is simply going to be a 50%. It's going to be exactly 50% of this. And one tool that you can use to help you find that is actually this tool. So it is a fib retracement. It's nothing different. Okay, it's just I have this. It's a different. It's one of my templates that I like to use, which helps me identify quadrants essentially within a range. You can see this is broken up by the 0.25, 50%, 0.75, and then, you know, like this is going to help me find quadrants within a range. Now, I'm going to take my little line here. I'm going to put it right at 50%. And maybe I'll change this to a different color. Let's make this red. Kind of like point of control, right? Which this is the midpoint of the range. So you have your low. And which, by the way, you can mark these levels off as well, if you would like. If you look, they're like pretty decent. Like there's a lot of times that these levels come into play. But I'm more interested in, again, the low, the high, and the midpoint. So these are kind of the 3 points within a range that you're looking for. And if you just look at this, the Amazon range in itself, you can see that the lows and the highs are incredibly well respected. Even the midpoint. Like, look at your midpoint, how well respected that is. Okay? So, now looking at this. Okay, that's great. So, like we see, we basically see that this is consolidation. So how the hell do you trade this thing, right? So when it comes to range trading, you're looking for price to continue to remain within this range for the most part until it proves to you that it's broken the range and that the range is not as right. It's not necessarily needed anymore. Now that's not always true. And one thing I want to point out really early here is when you have a range that is very well established. So this I would class as a very well established range. It's very respected. Look at your range low. You have 3 touches, phenomenal support, massive support level. So we could say that if price comes below this range low and actually you get acceptance below it, meaning that like price trades below this for a length of like any length of time, that it's likely to have a much larger retracement because of how important of a support that this level is, and vice versa. The top of this range, incredibly well respected. So you would say that if price breaks out to the upside, the odds of it continuing in that direction increase drastically. Now there's actually a really good example here, which I'll get into this, and this is called the deviation. So essentially you have your range, very well respected, price moves up, breaks out. So this looks like you're going to get the breakout, right? That like we're going to continue up from here. You even get a retest, which is pretty crazy. So price breaks out of the range, back tests, and this is usually a pretty nice long opportunity, which again, you're back testing your range high, which you would want to see held as support now, right? So this is a resistance level. Price breaks out, back test. This is typically a decent long opportunity. You do get a nice reaction here, but then it fails and you actually gap down. So this is kind of the danger of traditional markets, by the way, because, you know, and this is actually a really good example. So like if you're long from a retest, where's your invalidation? So your invalidation on that trade is simply getting acceptance back into the range. And you know that you're wrong on this trade, right? Because you don't want to see, so like this, this is not really acceptance, right? Like price does gap down back into the range, but immediately kind of reclaims. And you can see, even on like, you know, on a daily time frame. So it does come in for one candle and then immediately gets back above and again is kind of back testing this as support, and you get your move off, right? So this isn't really acceptance. This is acceptance. So like when you're clearly below the level, especially if it's holding as resistance, right? Like you're clearly in the range. So for this example, it was a little bit hard because had you been long here, price does move in your favor, but then it gaps down, right? You know, I mean, it heads right back to the midpoint of the range. So that could have been a pretty bad deal. That would have been a little bit rough there had you been in that trade. But going back to this again, so again, like I basically break this into two different parts. All right, so you have the low of the range, the high of the range. Well, I mean, I guess it's three parts, but like two different quadrants, right? So usually when you have a well-defined range like this, where are you looking? So like, where are you looking for trade opportunities? All right. There's really only 2 points that I'm interested myself in taking along, or taking a trade, I should say. So when you're down at the bottom of the range, this is support. So it's the same thing if you watch the support resistance modules. Your range low and your range high, those are support and resistance levels as well. And you can see that they're very important support resistance levels, right? So where's your best long opportunity? Your best risk reward long opportunity? Well, I would argue that it's down here at your range low. And yes, that's very obvious. But even if you just had 2 points, right? So you have the beginning of your range, your high comes all the way back down to the low of the range and gives you another rotation to the upside. So like it's ranging perfectly. And price starts to retrace. I mean, if you're kind of looking for the same like test again, right? Now, obviously it doesn't come all the way down. It's not always going to, but it came pretty close. And then did give you a pretty nice rise out of that. Ultimately, came down, perfectly tested the range low, and a full move all the way to the top of the range. So again, if I'm looking for a long trade, or if I'm looking for an area to buy, I'm definitely, if price is range bound like it has been here, I'm looking for entries near the range low. Because for myself, right? And I'll just use this as an example. Like I'm looking for an entry somewhere near the range low. Your invalidation for this is a little tricky, and I think it's a good idea to use like previous market structure. So it depends. Again, like you have to see if this trade makes sense to you. Is the risk reward good enough to use? But you know, I mean, that's kind of far. I don't think the thing is you don't need like, and I'm trying to do this as best as I can, because the thing is like you're not going to typically use this as a stop loss. So like maybe using this low or something, you wouldn't be using that, because all you would really need to see is getting acceptance back below, you know, if price loses. So if it did this, right? So let's say price came down, and then let's say you entered right there, bounces up, and then kind of does this. So once price loses the range, okay, so it loses support, maybe gives you a back test here, confirms this as resistance and continues to move forward. Once you see that, there's your entry, there's your validation. So this would be a short trade setup. Okay. So this is essentially what you would look for a short trade, because if you see this type of price action, you would be looking for a deeper retracement. All right. Now, this same setup here is also your long invalidation, your buy invalidation. Because so again, if I took my tool here, so let's say I entered here because I entered at this wick, let's say, right? But then instead of this price action that you see, that's the green squiggly line here is what happened. Okay, so again, the invalidation here is pretty tough, because my invalidation on this trade is not necessarily market structure, not using lows or, you know, previous market structure. My invalidation is something like this, where I see that, you know, there's a change of behavior, that there's the structure, the range itself is being broken. There's, you know, so again, say my entries here, I get a bounce, but it doesn't hit my target, which just wouldn't be my target, but I'm just saying hypothetically, it didn't hit my target and then rolls over like this and loses the range low support. Backtest this as resistance, which it doesn't have to backtest as resistance. This is like a perfect example. And then if you saw that rejection, I'd be out of my trade. Because my thesis for getting into this long position is I am buying the range low, looking for another rotation to the range high. If you are losing the range low, you're not going to remain in this trade because you're losing the range low. And if that happens, you're looking for lower prices. Okay. So that's a long, this is, again, when you're looking for long entries, but this right here is why you're looking for long entries at the low of the range, because it's from a risk reward perspective, you don't have to risk a lot to find out if you're wrong on this trade, because if you're able to buy the range low, and even if price again does kind of that squiggly line thing that I did, you're not risking that much to find out if you're wrong, versus if you, like, what a lot of people do is they buy in the middle of the range, and then where are you wrong, right? How can you structure your trade properly here unless you have amazing confluence that gives you a definitive level? But like buying in the middle of the range is more of a coin flip. That's why I do not like to do that, and I think it's a bad idea, because you're literally trading in the middle of a range. It's a coin flip for the most part, which direction it's going to go, and the risk reward is not very good. So I hope that makes a bit of, you know, and I'm happy to clarify that in later video, which we will. Like, we're going to get, this is the very beginning. We're going to get way in depth into range trading. But again, so I'm looking for long positions at the low of the range that we've identified, and vice versa. So if you're not a person who is able to short, so like short Amazon, for example, if you're not able to short Amazon or you don't like to short, again, you're looking for buys here. Take profit one, always going to be the midpoint of the range. I would argue that it's a pretty smart idea to take some off the table here, and then you could move your stop loss up to break even or something if that's what you wanted to do, protect your capital. But the high of the range is always going to be a take profit. So how much of that you take off, that's entirely up to you, but this definitely is a take profit level, because if you're looking for the range to continue, right? So if you're looking for the range to continue, why would you hold the majority of position once it reaches the top of the range? Because it's likely to roll back down to the downside, right? Now, obviously, again, I explained this. So you have a nice range form here, and then you have this. It was a bit of a fake out. So this, again, is deviation. I already went over that. What happens? Gaps down, right back into the range. You have acceptance, and now you're oscillating between the midpoint of the range and the high of the range, right? So we haven't broke really the midpoint of the range in a while. So really since, you know, for a few months now. And we're kind of hovering right here around the range high. So do we get another breakout attempt? Which it looks like that we kind of tried to get that breakout attempted, but is it coming? So this is another potential long area to look for. But I'd want to see a pretty definitive break, and then maybe another back test like this, something like that, give you, you know, this didn't work out very well. But that's kind of another long setup. I don't like that as much. I've said this a bunch before. I'm not really a huge fan of breakout trading. And this is one reason why right here, but I'm just not like a huge fan of it. But it is a legitimate trading strategy. Again, if you're looking for a break and you want to, you maybe buy a back test of this, you really want to see this level hold, right? Now, so looking at just this price, again, it's kind of oscillating from the high of the range to the midpoint, and it's just doing this. So it's kind of forming even a little bit of a sub range within a larger range, right? Because now price is just really range bound here. So opening a long position at the high of the range, typically a bad idea. because you're literally buying resistance, right? This is an area where you would look to take profit if you're long from lower. If you're long from here, again, you're definitely looking to take profit here. Again, I've already said the midpoint is usually an area where I take some off. The high of the range, I'm definitely like, this is the target. Like, this is the ultimate target of this entry. So why wouldn't you take profit here, right? People might get greedy and then hope that you get the breakout, something like that, in continuation. Now, again, you don't have to take 100% of your profit off of here, but if you're trading the range, you would expect to be taking profit here, looking for another rotation, right? So kind of the last thing about this chart is, and this is a little bit, I mean, this does have to do with range, but let's say that, I mean, we're at resistance right here, and if price does rotate to the downside from here, so let's say again, too much resistance, price ends up working its way back down, maybe get another bounce, something like this. So like, you get this acceptance below the midpoint, you'd be losing this low. If you see something like this, you're very likely, really should be looking for another rotation to the downside. So again, which is why you'd be taking profit. And even if you're trading this smaller range, okay, you could even break this down, and instead of this being the midpoint, this could be the low of this range. I hope that makes sense. So like, we're basically taking, you obviously have the larger range in play, but you could zoom in and treat this just like its own range. So this is the low of the range. This is the high of the range is basically the same, right? And you're just looking to play this range. And then maybe you could buy here again, which again, I'm not a huge fan of playing the midpoint of the range, but this has a few iterations of it being support. So maybe you look to buy here again. And then if you get this type of price action, you're exiting your long position, because at that point you'd be losing support. And this being the midpoint of the larger, bigger range here, right? Again, you would be thinking price is likely to rotate back down to these lows, to give you, again, another opportunity for a long entry though. Now, one thing that I haven't talked about very much, which is insanely important, okay? The previous trend is king. This is absolutely important to always keep in mind when you are looking to trade ranges, because typically, just like here, here's your trend, sideways consolidation, and price broke out to the upside, continuing the trend. To me, this is really no different. You have another, so you have your consolidation, another impulsive move to the upside, forming this range here. Ultimately, like, just looking at this crazy, ridiculous trend, right? You're looking for this. You would likely be looking for this to continue to the upside. Now, is that gonna continue forever? Probably not. But when the trend is this strong and it's been literally just up, I mean, you have retracements, you have corrections, but overall the trend is very bullish, right? I wouldn't really expect this to change very much. I would continue to favor the trend and look for, that's why I don't think it's going to be that big of a surprise when we get a break of this range and when you get legitimate continuation to the upside and not have another deviation, right? So as far as, again, the trend is king. It's critical to range trading in the sense of when it comes to positioning yourself. At least for me, I want to position myself or size my trades a little larger, or be a little bit more lenient when it comes to how much profit I'm securing at each level. If my trade is going in the direction of the trend, which in this case is long. So if I'm longing the bottom, right? If I'm longing the range low, take profit 1, take profit 2. Me personally, I wouldn't be taking 100% of my trade off, just because the overall trend is so powerful, right? At some point, I do think that this probably breaks and continues to the upside. So like, I would like to have a position in there if I'm trading this. Now, so that's kind of, again, trend. macro bullish, insanely macro bullish, right? So you would argue that the long side of the trade is the trade that's favorable. Like that's where I'd want to be. I would be more interested in being in a long position than a short position, because long positions have historically have been the way to trade this asset. Now, what does that mean for the flip side? So if I'm taking short positions, right? Or, again, like if you're able to short Amazon, are you like, is this a good short here? And I would argue, yes, it is. It's a good short. Now, the context here is that you're shorting the range high, and typically shorting the range high is usually a good idea, right? As long as you're well aware of your invalidations and you're able to manage your trade accordingly, which the invalidation for a short here is simply breaking above the range and holding, right? So this would have probably faked most people out. We got a break above, we held it, got a bounce. So people are looking, anybody who's short here is likely exiting their position. And then we get, then this happens. But it just happens. Not every trade is going to go perfectly. But again, this is essentially what you would be looking for an invalidation on your trade. Because history has shown that, there's when the range breaks to the upside, there's going to be significant follow through. So again, back to this part. If you're shorting here, everybody's going to manage a trade differently, but I would be way more protective of a counter trend position. So again, macro long, like macro incredibly bullish. If I'm taking a counter trend trade, meaning I'm shorting, or I'm betting on price, that price is going to go lower in an asset that is like this bullish, I'm going to be much more protective of my trade or my position. And again, this is just me, but I'm looking to secure profits faster. So if I short here, I'm definitely taking some off at the midpoint, and I'm probably taking a decent amount off, right? Like maybe 50%, something like that. And everybody's gonna be different, but like I'm definitely taking a pretty good amount off here. And then if price does come all the way down to the range low, I'm securing all, or if not the majority of my position here. And the reason for that is very simple. Again, macro bullish, come down to your range low. For me, I would probably cut the trade there, call it a win. If you get this behavior again, comes down. So let's say that, you shorted here, right? We shorted here, take profit 1, price moves up, comes back to the range low, take profit 2, I'm out of that trade. If it starts to do this, I can get right back into my short. Am I going to miss out maybe on a percent or two? Maybe. But I have confirmation now that the range is breaking to the downside, so I can get right back into position and honestly have a bit more faith, or like a bit more, a bit more, technicals on my side to look for lower prices. So it would make me feel better about being in this short position, being that you're shorting a break of the range low, right? Versus shorting the range high and taking it right back to the range low. So I hope that makes sense, and I hope I'm not confusing too many people. But again, I would be, when you have a trend this strong, anything counter trend, like you're gonna fade this move. It's like if you did that. So this is how I want to pose it to you, and I really want to think about it this way. Do you think, looking at this chart, that this is a great chart to short? I don't think so. You might win sometimes, right? Like you might have it's not that you should never do it, but on the macro scale, high time frame, is this really something you want to fade? I would hope not. It's much easier to be bullish on a chart like this than it is to fight the trend, right? Because you're likely going to get wrecked over and over again as this thing just continues higher. Now, obviously, we're in a nice consolidation, pretty nice. I mean, we're in a very nice range, but there's times and places for counter trend trades. And I know that we're talking about Amazon, which is a stock, and people are wondering, like, what the hell am I doing talking about a stock? The fact is, I actually started trading traditional markets, so I'm very familiar with that. But as far as crypto goes, especially with the volatility there, like we're kind of seeing today, the thing about this is that it works in any market. It doesn't matter if you're trading stocks. It doesn't matter if you're trading forex, it doesn't matter if you're trading crypto, this works the same. Like, this is the same thought process, the same technical analysis. It works the same for any market. So that's also part of the reason why I wanted to kind of, spend some time talking about something other than crypto, just to show you that, like, it works. It's the same, basically the same thing. So hopefully that was we're going to have many, many, many examples throughout this module. There's going to be quite a few videos, and we're going to get into depth on, quite a few other things, but we can take a look at another chart just to kind of get a bit more practice breaking down the range, identifying the range early, that type of stuff. But I wanted to spend a bit of time on Amazon because it's been such a good chart. Like, and this is a very, very good range. It's very easy to, like, this is a good starting range for you to learn. Now, I guess before I leave this chart, one thing that I want to say, I said this earlier, don't delete your old range levels, especially when you start to be able to get the other levels that are going to come, that I'll show you how to get later on in this module, in future videos. But when you have something that's so well respected for a length of, like, a period of time like this, if you break the range, so let's say price moves lower, right? I would want to save this range how I have it set up here. Now, obviously, again, this is very easy to redo. But a lot of times when you break a range and you leave a range for a while, eventually in the future, when you do come back to it, because, I guess you don't always revisit old ranges. Like, if Amazon just died and, never came back up to these high prices ever again, then yeah, it wouldn't be that useful. But let's say that price broke down. There's a couple of things that I would tell you about right now, and about deleting old ranges. If this started to lose structure and, like, majorly pull back, one area that I'm going to be very in tune with as far as potential targets to the downside is your old range. So again, you have kind of like your old, range up here. It's going to look something like this. This is just like a really general look on how this range would look. But and you can kind of see, like, this same support resistance level here we broke out from. I would be looking for this as a potential support zone in the future if this did come down. So that's why it's really I've given a ton of examples of this. If you've been following me for any length of time, you know exactly what I'm talking about. But I just want to highlight, if you're brand new or, like, you haven't followed me before, again, with the old range levels, definitely keep them in your chart, keep them in your folder here, right? If you have a folder, and put it away, and that way, and set an alert, something like that. If price starts to break down, you're looking for these same range levels to be respected. So if price broke down from here and then, spent some time and then started to work its way back up, the moment that price re-enters this range, okay, so it does something like this, I don't know, whatever you want, and then it starts to re-enter this range, I'm looking to go right back to trading it exactly how I traded it here. The same high, the same midpoint, the same low. Obviously, later on in the learning module, you're going to get to see some other tools that we use to get really pinpoint precision as far as levels go. But again, this is why you keep those old levels on your chart, because a lot of times they come back into play, and you'll see that a lot of ranges get respected. Even being, again, price leaves it and comes back in the future, a lot of times you get really good respect. Let's see if we can find another example. And these are all my stocks. This is trending really hard. Yeah, that's not going to be very helpful. That's not going to be helpful. Well, Apple. Oh, nice. Well, this isn't a range. But you have this basically ascending pattern here. Like, it's really well respected. Again, this has nothing to do with the video, but I'm just saying, like, again, it comes up, this is probably a pretty good sell, comes to the bottom, might be a decent buy. Obviously, if you have other confluence anyway, I don't want to get into this too much, but yeah, that looks pretty good. What about this? What's that? Alcoa. Is there anything here? Oh, that's pretty good. So this is a decent example. Maybe if I go down to a little bit lower time frame, because this is a newer range. This is a newer range that's kind of being formed here. So if you notice, so you have like impulse, bit of consolidation, you get a range get put in here, price reverses back down. Impulsive moves, this is a big impulsive move, correction, impulse, and then you're getting this sideways consolidation, right? So it's real similar to Amazon and how it's kind of progressing here. And you have a big, well, we're getting to that, but this big deviation here too, this is a pretty good example. So right away, I'll tell you where I would start this range. So you can maybe take a look and say, where do you think the range starts? Again, impulse. And right here about is when it starts to kind of go sideways, right? So you have your high, your low, and then another rotation to the high gets rejected here. Price starts to come down. You know that you're very likely starting to form a range, right? Which just ends up being a really nice range. So just zooming in a little bit. Kind of the same thing. You mark your high. This one, I mean, it's gonna be pretty close, but something like this, maybe. You could use this high. This high is actually a bit cleaner, but it starts basically back here, right? And then your low, which you could use this. So like there's a few different ways to do this as well. And I would say whatever fits the chart the best is typically like what I would stick to, right? So you'll see that when I'm drawing horizontal channels, that type of stuff, you'll see how, like, I'll get into that a bit later. But I would actually, if you want to be really precise with this, instead of using this wick, I would use this candle closure here. And you see that? Where the magnet tool comes in handy, but instead of using this wick low, I would actually use this close here. So where the actual closures are. And then you can see that this is much better respected when price does come back down to the lower range. And then again, we have a higher range here and price is pushed off. So this is where I would keep it. Yes, you have a wick low here, but still, this looks much better, right? Much more respected. So that's what I would go. That's what I would trade off of. I mean, here you could even adjust this as well. This is like really minor stuff, but this is about, you know, this precision matters. And if you're getting into a range at this point, which you can, I mean, again, you could be adjusting these levels. Now you shouldn't be adjusting these like too crazy, but if you can make little adjustments to make your range better, so you're going to see exactly what I did here. I'm using this closure and this high, right? This gives me just this gives me a better range to look at, essentially. Again, as the range can certainly expand, which is kind of what it did here a little bit, but you can adjust these a little bit. Now again, you don't want to be adjusting it like anything super crazy, but if you make little minor adjustments to get as much price within the range as possible, as long as it makes sense, and I hope that you can see the few adjustments that I made, how much of a cleaner range this became, right? And it doesn't have to, so like to be clear, it doesn't have to touch the line. This is close. That's close enough. This is a test of the high of the range. This is, you know, this does not have to come and actually make contact with it like it did on this other occasion. So Alcoa, same thing. You have your range low, your range high. You have the same deviation that Amazon had. Obviously, this is on only a 4-hour chart, but you do have that deviation to get acceptance back into the range. What happens to price? Right back to the bottom of the range. So that's typically what you would be looking for. Same here. And again, if you use the wick, it's not going to make that big of a difference, but I'm going to go literally where the range is up to, you know, where this line is. And I'm going to find my 50% mark just so that I have a baseline. Okay. So there is my base. Oh, I just realized now all my lines are red. It's okay. So maybe I should change these. just so I don't confuse anybody. Sorry about that. So anyway, range high, midpoint, range low. Where are you looking for longs? Are you going to be buying here? No. The answer is no. Not a good idea typically, because you would be buying resistance, right? This range high has been resistance. So even here you got a deviation. Price comes back to the midpoint, by the way, of your channel or of your range, comes back up, doesn't perfectly test the high, but you get a rejection off of here all the way back to the low of the range. So where are you buying? Low of the range. Okay. So if I'm looking for a long position, am I buying here? No. I'm looking for somewhere around here. And maybe, so this is a little bit of a better example. Now I would be a little bit careful because you could obviously swing failure pattern in this, which I don't want to get into that in this video. But that's generally, it's going to be the same thing. Where's my invalidation going to be? It's if price starts to do this. So let's say price comes down here. I'm filled. So now I'm long. I guess I should just do this so you can see. My target would be, so target 1 would be the midpoint of the range. Target 2, the high of the range. Okay. Now, if price kind of did this and started to get acceptance, meaning that it was spending time below this range. So it's not just a little wick like you see here. Okay. Not just a wick, but you're actually getting price action that's opening and closing candles below here. I'm out of my trade. I don't need to, like that, as far as that goes, that's my invalidation. As soon as I see this start to happen, I'm out because the range is broken, right? And then when you see this, so let me delete this. So when you see this happen, you're looking for lower prices unless, which this happens from time to time, of course, unless you see something like this, then that's another long trigger. And the funny part about this is if you see something crazy like this happen, where it exits the range and, if you're long here, you would be stopped out, you would be exiting this because as long as price has acceptance below the range, you're looking like this thing could pull back. And you could obviously use, other technical analysis methods, support and resistance, Fibonacci, that type of stuff to find where these pullback targets ideally would be. But from a range trading, just keeping it to this module, you would be looking for lower prices. Now, if price came back into the range again, though, that's another long position. And the beauty of this is that you actually would have a clear invalidation using, now you have a bit of market structure here to give you a cleaner invalidation. So instead of worrying about price coming back through the range, which maybe the range low is kind of getting, worked through a bit, or it's not as technically, again, it's been tested, support a bunch of times, and then maybe this level is getting washed out. This is where you would use market structure to put your stop loss behind, because again, if you get acceptance back in here, you're taking a long position, your stop loss would be whatever low was created here, because you would think that if this low is violated again, meaning price comes back down and takes you out, it's probably going to continue at that point. So that's a bit of another way that you can look to trade this. Okay. So hopefully I'm not confusing people, but I'm trying my best to give you some trade ideas here. And kind of like, again, how do you trade, like how do you actually trade these levels? So we identified the range, but how do you trade it, right? So like that's what I want to make sure that I convey, because it's very much, it's very important. And then it's the same thing as the Amazon example. If you're long here, take profit 1, take profit 2. If you wanted to keep some on because you think this is ultimately going to continue to the upside, which if you look at the trend looks really, really, really good, I wouldn't blame you. And you could certainly, and I'm not going to get into it in this video, but you could compound your position back on as well if you wanted to. So and by compounding is just simply adding to your position on confirmation that we're breaking out of this trend. Because if that happens, you're looking for continuation higher, right? So maybe you want to add a bit more size back onto your trade because you have that confirmation. But again, from just the range trading perspective here, entry, target 1, target 2, out. You're out of the trade, or if you're hoping that this breaks out. And then the counter trend trade, the short trade in this instance, again, you're short here, target 1, target 2, and for myself, I'm probably closing most of that, if not all of it. Because again, just like Amazon, if this breaks to the downside and gets acceptance below this range, I can very easily get back into my short. And I'm only going to be missing a little bit. Like a little, and I'm fine missing out on percentage too if it means I get better confirmation. Because as far as trading this range goes, I'm about securing as much profit as I possibly can. Right? Not trying to hit the home run every single time I get in here, because this is why people mess up in range trading. This is why people fail. Is because they don't stick to, good rules that I think that you should stick to as far as range trading. And people take too many trades at the midpoint of the range. And this is literally a coin flip a lot of times. So it's just generally not a good idea to take new positions. I'm looking for extremes. So either the lows or the highs. That's where I'm interested in getting into positions. I am not usually interested in taking a position in the midpoint of the range. So hopefully that makes sense. So last chart, you might recognize this one. Talk about it a lot. This is Bitcoin, and this is right now. So I want to just go over a few examples here to try to help you identify ranges. So again, you don't have to have those perfect crystal clear ranges like we saw previously, right? So I'm going to try to actually step up my game a bit here and show you how to find ranges on even smaller time frames. So the stuff we were looking at, Alcoa was a 4-hour time frame. Amazon, that was on a daily time frame, but I mean, again, the range had been well over a year. We are literally on a 5-minute chart on low time frames, and we're going to identify some ranges. That way you can see how the range levels interact with each other. Hopefully, that's going to be the goal, right? So right now, currently, we are forming a range. I'll give you a bit of time, just a second here, to see if you can identify where you would probably put your range levels. Okay. So for me, this would be my range low. Look how crazy respect that is right now, by the way. This is an immensely important level on low time frames right now. You see how many times it's been tested. So look at this move. Big move down. Nice flush here. Wick low, nice bounce. Bit of, again, this is a range right here on its own. All right, so like this right here is even a bit of a mini range. This one I would do a little bit differently, honestly. Do something like this. This would be my kind of my range here. And then we obviously breaking down, we lost the range. Now we're looking for lower prices, right? Now, would I be trading this? I mean, you could go on like a 3-minute, maybe, like not really. But again, this is kind of like how you would look to identify that, right? Like it's where the majority of the price action's happening. But for, again, the more relevant one right now is this current range here. And really, I would mark it off like this. And one thing that you can do as well is look back historically and see if there's a better place for your range high to be. And you kind of see you come down, like a bit of candle closure here. You do get a reaction off of this level before the flush. So if you were to take this line and go all the way through there, you see like where the candle bodies are before the flush, and then it kind of comes up and retests this. Now this is very low time frame stuff, but that's kind of why this is nice confluence on a 5-minute chart to have this as your range high. Okay, so that's kind of how I would do that. But again, this is the range that I would be looking at. Kind of the same thing here. And again, this is where on 5-minute chart, very low time frame. You don't anticipate. Now, sometimes Bitcoin surprises you, and we'll spend days here in a range like this. So that's why it's worth finding these ranges, because sometimes these things could still trade for days and give you a ton of trades, right? So here's the midpoint of the range, which, by the way, if you look right here right now, we are rejecting off the midpoint. So the midpoint, like, look at the respect, right? low, midpoint, rejection, get above a little bit, rejection, and move back towards the bottom of the range. This is your resistance, and we're currently sitting below it. So here is your range on 5 minute. This is right here, right now on Bitcoin. If you lose this low, I do think that you probably see a pretty good continuation to the downside. Again, 5 minute chart, you probably see a few $100 to the downside. But this here locally is the range to be looking for. And right now you're basically being rejected off of the midpoint of it. If you're able to get above the midpoint, then I do think that we have a shot at actually rotating back to the top side of this range. So it's something to be aware of, okay? But again, here's your range low, which is very important support here locally, like critically important support. And then you have your high that hasn't really been tested. It's tested once. But, you know, I do think that this is, it wouldn't surprise me to get a reaction off of here. And this is coming in at 61.5. And again, this is very low time frame stuff. So you're not going to expect miracles a lot of times on these ranges. But when it comes to Bitcoin and you're looking and you're scalping, so I want to be very clear about, I guess I need to clarify that, is that, you know, when you're on a 5 minute, this is scalping time frames, meaning that you're trading very low time frames and your trades are very quick. You have to be reactive, like really, you have to be able to manage your trades, feel comfortable trading on a time frame like this, because the trades come very quickly. So you can see here your low was put in, you get a nice bounce, comes back to the low again. That's a buying. I mean, if you're looking at this as a range, which, you know, I don't know if you technically would be yet, because again, for me, the range would be here, right? But then the range gets expanded on this touch, and it's kind of like this, you know, again, where these candle bodies close here, comes in and tests the underside of that, and you get a rejection. So again, this is the range for me now. But where are you looking to take long positions? Well, it's here. I will say again, this is a 5 minute, and considering the trend, so this is a little bit of a reversal from the previous two examples. The trend on a 5 minute, I mean, locally here, is obviously very bearish. So you are technically now, like, if you, again, this is just strict what you see right here, and you don't have any other, you know, any other technical analysis tools that are going to tell you whether or not, like, this is super strong, you know, resistance or support or whatever. For what we're doing just for this module, this is counter trend. So longing the bottom, if I'm gonna buy somewhere, I want to long the bottom. Like, I want to long the low of the range, because you're gonna trade the range until it doesn't work anymore, right? So you're going to trade the range until the range breaks, either to the upside or to the downside. So again, your long opportunities are below the range, but you have to be cognizant of the fact that you're taking a counter trend trade on this time frame. Very bearish at the moment, but down a 5 minute time frame. Okay, you see we got, again, another bit of a rejection here off the midpoint. So you're looking to long here, take profit one. So here's a perfect example. Come in long, long the bottom of the range. You have your support confirmed here, your range low. You have your range high that got put in. Okay, so let's say you longed here, target one, target two. And I'm telling you, for myself, when the trend looks like this, when I hit target one, my stop loss moves to entry, and I get very protective in my position, because I do not want this to turn into a loser. Because when you have the kind of volatility that we've had recently, and the trend that you see here on locally, this could move very quickly against you if you're not careful. So as you're trading very low time frames. So again, long here, target one, target two, and once I hit target one, for me, stop loss to entry, and I cut the risk. There's no real chance of that trade becoming a loser now, assuming your stop loss hits appropriately. Because again, you lock in your profit, move your stop up, it's a risk-free trade at that point. You move on to the next setup, or go pull up another chart, right? And then if it hits the top side of here, take profit two gets hit. If you wanted to leave some on, you can leave some on. If you want to fully cover here, and maybe even, again, you see a bit of rejection here, you want to enter short, then you would enter short, target one, target two, right back to the bottom of the range. You continue to trade this, right? So we have kind of this going on. Maybe we see something like this. you know, something like that. I'm just saying, you just trade the range until it breaks. So that's Bitcoin right now. See if we can find something else. I don't want to, this video is actually turning into a really long video. Oh, here's a nice one. This is a really nice range here. Yeah, this is a really nice range. It's a little bit different. It's a little different. Obviously, I'm gonna go up to a little bit larger time frame. That way, that looks better. But this is a very tight range. So obviously, you get your low put in, big low, nice buyback, and then you just had this really tight range. This is honestly not really something I would probably bother trading because it's way too tight of a range. There's just not enough really there, in my opinion. But if you use like a larger, kind of like if you use a larger trend, I'm sorry, like if you zoom your range out a bit more, then yeah, I mean, I think you certainly could. Like for here, you have a pretty clear range high, right? So it's basically, I mean, you could do, it's really about the top here. So this is the high of the range pretty clearly, right? And kind of the thing that I like about this, again, looking back, is the low wick here before this impulsive move up, but ultimately, like you see this cascade action here, it's very close to the top of this range. So I like to see that. But again, this is where the highs have been. The lows are a little bit more tricky. I mean, wow. So like you can see here, the high of your range, right? It gets broken here, retested, held a support, and you're actually forming a micro, like a little mini range here. Dips back in for a second, comes back out. Ultimately, you lose it though, and this is real acceptance. Like when you see price start to trade back to the downside, you're trading. You know, you've lost you're back within this trading range, and you're looking for the bottom of the range. So bottom of the range is a little tricky. Depends kind of like where you got into this. You know, it depends kind of where you got into this range. This one's a little trickier. You really wouldn't use this because you don't, like when you see price action like this, you don't typically, I mean, when you have wicks, long wicks like that you see here, and I had said this in Discord yesterday, I believe, or it was very recently. A lot of times when you get long wicks and then a strong buyback and then you kind of see price action do this, you do see it has a tendency to come in and fill a lot of the wick. Now it doesn't always fill the entire wick. This one it did. It came very, very close to the bottom of there. But you see price ends up coming in, you know, filling most of this wick. But would I consider this like your range low? I mean, wow, okay. So look here, it's kind of funny, right? So the bottom of this wick on the flush down, look at that, flush, back test, now it's resistance and then rejection to form this local range here. But I mean, I don't know if I would necessarily use this as the bottom of the range. For me, this is kind of like I mean, yeah, I guess so. This is the bottom of the range. Because I would use, I mean, I have a different tool that I would use to pull the sub levels within this. So I guess, yes, this would be the bottom of the range. It's just not, this isn't a very good example, to be honest. Or I wouldn't, this is not as good of an example as, you know, to trade kind of like how I've been talking about this video. But same thing. Could find your 50%, which to be fair, it's pretty decent. Pretty good respect. So yeah, I mean, it does work pretty nice. Obviously, if you know me, you know that I don't, like, I trade ranges slightly differently. It's the same method, the same thought process. Literally, I mean, I guess it's not super different from this at all. You know, it's not, I mean, it's the idea is exactly the same. It's just I have a few more tools that I use in conjunction with this. So, but yeah, I mean, this is your range low, midpoint, range high, same theory, long in the low, shorting the high, taking profit in the midpoint, and then we break here, and this is kind of a nice clean. Again, you lose the range low, price gets a pretty good response off of this wick, tries to come back up into this range and can't. This gets rejected. And then now you're forming this mini consolidation right here. So if price is able to kind of get back into this 62 to 22 region, something like that, right? So if price is able to kind of reclaim this, maybe do something like this. So now you're going to be breaking out of this range, which would look pretty good on very low time frames. You have your next resistance because it was resistance here. If it's able to kind of push up and reclaim this, then maybe, you know, it could ultimately push to the upside. Which, to be fair, so like on this time frame, looking at it from this perspective, so this was a deviation here of range. Okay, so you have your kind of your wick low, putting in a consolidation here. Price moves up, fails to break above this range high. I mean, it does break above it, but it comes back in like rather quickly. So you could class this as a deviation, comes back to the midpoint, finds support here for a little bit, and then ends up falling through the range low and then back testing as resistance, right? So for this scenario, kind of what I would want to see is acceptance back into this overall larger range. You get acceptance back into this overall larger range, and then again, you would be looking to go back to trade this range essentially. And again, for those of you who are following me, you know exactly how I would trade this and what levels I would be looking for. But, you know, if price is able to get kind of back up through here, I think, again, like this would start to look like a deviation in itself, and that would be pretty bullish. So it would, if, you know, again, if price can reclaim this high, I think that it could end up pushing significantly higher. But again, that's kind of, this is a little bit outside the scope of this video. Shouldn't spend that much time on it, I guess. So anyway, that's, you know, as far as video one goes, I just wanted to identify some areas that I thought were really interesting. So here's another little mini range, I guess, before I go. Right here. I'm not going to change the colors. It's basically something like this. Right? Impulse, consolidation, impulse, consolidation. Here's even another micro range here. But, I mean, you can find these ranges to trade almost anywhere if you look on the chart. And you can, again, you can trade these. When you learn how to trade these mini ranges, it's actually, like, it's very powerful. You know, again, if you're trading using leverage, which I would not advise you to do until like you feel super comfortable, obviously, but you can, you know, even these smaller ranges, they're large enough to be worthwhile trading. But again, impulse, range, impulse out of the range. So like you could definitely have traded this the same way that we've traded every, you know, the same way that we talked about the previous examples. So to wrap up video one, it's a lot longer of a video than I think I probably wanted to do for video one, but you know, I try to be as thorough as I can be when it comes to that type of stuff. But anyway, just some very, very simple tips on trading ranges. So the range low we talked about, that's where you're looking for long positions. Or that's your second take profit on a short position, right? If you're shorting the high of the range, then the range low is typically where you're going to be looking to hit your second take profit or close your short trade out. If you're looking for that range to continue. The midpoint of the range, which you had seen, that's always for myself going to be a take profit one, just because you see that the midpoint a lot of times is actually really well respected, right? Like you might not get the full rotation up to, you know, the top side of the range. So the midpoint becomes a really important level on its own, and usually a really good area to take profit. And if you want to be really protective of your position, that's where you would look to move your stop loss up to your entry as well, right? To be protective of your trade and make sure that you guarantee yourself a win there. That's the midpoint. Then obviously the range high, that's where you're looking for short positions, or, you know, like you're looking for a short position to take it back down to the range low, or that's your take profit two on your long position. Okay, so again, if you're in a long position, midpoint, take profit one, range high, second take profit, you're either closing your trade in full or you're taking the majority of your profit there, just because, again, as long as an asset's range bound, you're looking for that trend to continue. And last, here's my social media page. For those of you, you know where to find me, most of you guys. But if you're new to this, If you're new to my channel, first of all, welcome. And this is where you can find me. I spend most of my time in Discord. So there will be a link to Discord and invitation, and it's free. Unless you want, obviously there's VIP as well if you're interested in that. But Discord's completely free. Come join me in there. I think we have almost 10,000 people in Discord now, which is insane. That's just amazing. But anyway, I spend most of my day in there. And then you're obviously watching this on YouTube, Telegram. We have, I think, 3,500 in there, and Twitter. So please, I need more Twitter followers. Like, please. Actually, you don't have very many. I think I have like 2,700 or something like that. But it would be cool. I really actually am. I'm enjoying Twitter, and I'm gonna start posting a lot more stuff on there. So anyway, that's where you can find me. The next video is going to be an epic video, in my opinion, and that's where we're going to be going over the fixed range tool. So if you aren't familiar with that, it's an incredibly powerful. I use it every single day, and it's really helpful to identify key levels within a range to help give you kind of that added confluence to take trades. It's an amazing tool. So stay tuned for the next video. With that being said, we'll see you on the next one. Trade safe out there.